Stablecoins grew so much in 2024 that if Tether were its own country, it would have been the seventh largest buyer of US Treasuries. In fact, over the past few years, stablecoins have gone from a small asset class mostly used by crypto traders to cash out their profits into a major driver of demand for US Treasuries and an asset class that's worth over $200 billion and is having a real impact on macro. In today's video, I'm going to break down what that impact is, how stablecoins are being used around the world, and how one of the biggest real use cases of crypto demand is hiding in plain sight. Now let's get into it. So let's talk stables and what that actually means for macro and why they're growing so much. Stablecoins are crypto tokens that are pegged to a real fiat currency, typically 99.9% of the time. So Tether, for example, has a number of stablecoins, but their biggest one, USDT, is going to be pegged to the US dollar. Second largest stablecoin, USDC, is also going to be pegged to the dollar. And the vast majority of stablecoins are tied to dollars in some way. But this asset class has been growing so much that it's now actually worth over $230 billion. And for comparison, 4 years ago in 2021, it was around $60 billion. If you went back further before this chart, you would find that it was significantly smaller in the tens or even single digit billions of dollars. And then now it's $230 billion. And if we zoom in just to the past year, we can see that it's added upwards of $80 to $85 billion of market cap just in the past year. And the thing to keep in mind is that stablecoin market cap is real market cap. Unlike most crypto tokens where you can have some of the supply that's out of circulation and the market cap is pumped up by low liquidity and market makers, stablecoins, every stablecoin or almost every stablecoin is backed one-to-one by some sort of real asset. Typically that's either cash or cash equivalents in the form of short-term US Treasuries. And we'll talk more about what this is doing to the Treasury market in a minute. But so this market cap basically is real. One way to even think about stablecoins and why I've talked about this as a useful metric before on this channel is that it's kind of like real money that's in the crypto market, right? It's real dollars that are circulating on chain. And even over the past month, $5 billion have been added to the stablecoin market cap. Past 7 days, nearly $2 billion. So even as the market has cooled down, total stablecoin growth has just been plugging along. And to what I mentioned at the beginning of this video, in 2024, that growth was so dramatic that Tether, the creators of USDT, purchased over $33 billion of US Treasuries. And now you can compare that to countries. That is more Treasuries purchased than Canada, more than Taiwan, more than Mexico, slightly less than the United Kingdom. And if it was its own country, it would be the seventh largest purchaser of US Treasuries. And this is significant because this means that stablecoins and the growth in the stablecoin market is now actually a significant source of demand for US Treasuries. And when you consider that most of the backing of this $230 billion is short-term treasuries, it's actually a non-trivial percentage of treasuries are now actually backing stablecoins. So they're becoming tied to the US financial system and the dollar. And you don't need to take my word for it. This is the Treasury Secretary for the United States saying stablecoins will preserve dollar dominance. Scott Bessent, Treasury Secretary, said, as President Trump has directed, we are going to keep the US the dominant reserve currency in the world, and we will use stablecoins to do that. So again, you don't need to take my word for it. The Treasury Secretary is now saying that they're going to use stablecoins to keep the US dollar as the dominant reserve currency in the world. And you can think about it, and it makes sense why that would be, right? Because for people in a lot of countries around the world, they would much rather use the US dollar than whatever their local currency is. They'd rather hold it. In some cases, they would rather have their obligations in it because their own currency volatile. But when you have currencies that may have 60% inflation in a year, of course, you'd rather use a currency that's relatively stable, like the dollar, even though we have many of our own problems in terms of money printing and debt and all of that. But how are these people going to get access to dollars? Well, they could have cash, right? Not always the most feasible in the world where everything is increasingly digital, and in some cases, it's even there's restrictions on whether you can have cash. Easier is they actually use stablecoins, and they use stablecoins tied to the dollar. And we can see this trend if we actually look at peer-to-peer payments. So let's look at this. These are peer-to-peer payments using stablecoins, and we can see the growth over the past 5 years here, right? We can see that it's grown from something like $35, $40 billion a month 5 years ago to now roughly $1 trillion per month in peer-to-peer stablecoin payments. So this just means wallet to wallet. It's not counting like people using stables for crypto trades. And Visa and the other major card companies are now recognizing this. And for example, Visa has their own stablecoin dashboard now. They're tracking stablecoin stats, and they've made a number of public statements about the importance of this as an emerging payment rail. And I think you can tell they're starting to put their money where their mouth is, because they're launching stablecoin products. And then PayPal is another one. PayPal, of course, pioneered a lot of internet payments, and now they are also launching their own stablecoin, or they launched it rather in the past. PayPal USD, Pi USD, backed 1-to-1 by US dollars, and Pi USD was one of the faster growing stablecoins last year. So now you have another major online payment provider is getting into the stablecoin race as well. And to what I said before about them being appealing to people in places who maybe don't always trust their local currency, you can look at where stablecoins have the most demand. And it's, for example, in Argentina, which had catastrophic hyperinflation for many years. It's in Nigeria. It's in Turkey. It's in India. It's in South Africa. It's in Kenya. It's in a lot of countries with more volatile currencies where they would prefer to be able to hold and transact in US dollars. And this gets to a bigger change that crypto stablecoins are going to enable, which is basically the global distribution for all things financial. Anyone who's ever actually tried to send money overseas, pay people overseas, make a transaction knows that oftentimes there can be massive delays. There's a lot of hoops you have to jump through. With stablecoins and other tokenized financial assets eventually, because that's coming, you're going to actually have global distribution for these things in a way that really wasn't easily possible in the past. A prime example of that is Polymarket, the leading prediction market in the world, which uses crypto rails and specifically uses stablecoin rails, right? Your money that's in Polymarket that's being transacted in there is stablecoins. And Polymarket, I think part of why it took off is that other stablecoin or other prediction markets in the past had always struggled with payment rails. I remember I was using one years ago, and to cash out, they were going to send me like a physical check from somewhere overseas. It was just a horrible experience, and stablecoins actually allows the global dissemination of a product like that. Fast forward 5-10 years, and what does this look like? Well, for one thing, I think we're going to see stablecoin supply go to at least $1 trillion. Right now, it's 230 billion. Such a clear product market fit, such strong growth, regardless of market conditions. Most bull runs in crypto have been cyclical bull runs. I think stablecoins are in a secular bull run where their adoption is actually growing year after year, and some of it is boosted by people speculating on crypto, but a large portion of that is people actually wanting to use and hold stablecoins. So I think that goes to $1 trillion, probably beyond that, And I think you're going to start to see a situation where you have many people around the world, even more than who already are, start to prefer stablecoin US dollars to their local currency as the way for them to store money, as a way for them to transact. In many ways, it's actually better than a normal online banking experience, especially with the right stack of wallet or exchange, whatever you're using. And so as that happens, I think you actually will see the dollar be more dominant, and you're going to see this number creep up where Tether and maybe even other stablecoin providers are an even larger source of demand for US Treasuries. The tricky thing if you're a crypto investor is how do you actually invest in this thesis? Because Tether is not a company with a token or stock you can invest in. The second largest stablecoin, USDC, same thing, not a company with a stock or token you can invest in. Circle is the company that makes USDC. And so then what can you actually buy? Well, if you go down the list further beyond Tether and USDC, there are some crypto native stablecoins. Now they're significantly smaller, but they do have tokens. Athena USDE. They also have Athena USDTB. Both of these are part of the Athena ecosystem, which has the ENA token. And actually in the Dynamo DeFi Substack, we just published an article, Is Athena the Best Way to Bet on Stablecoin Growth, where we break down a deep dive on Athena, everything about it, and the thesis behind it, as well as some risks and hurdles to that. So if you want to learn more about Athena, check that out in the description. Another play might be MakerDAO. So MakerDAO, one of the most seasoned, resilient DeFi projects, whatever you want to call it. They've been around for half a decade at this point and are still growing. And so they have USDS and DAI. Now, those are actually both stablecoins from MakerDAO. Originally, it was DAI. They rebranded to Sky, and Sky Dollar is the new one. So you can think of these together, and if you add them up, they would be the largest crypto native stablecoin. So that would be a great way to bet on that thesis, would be MakerDAO as well. And then as you go down the list, there are some smaller ones as well that are growing. You have Ondo, for example. They have their yield-bearing stablecoin. You have Usual, which I've talked about in this channel before, was growing a lot last year. It's slowed down a bit this year, but is also a crypto native stablecoin, basically trying to build Tether on chain. And there's many other small ones as well that you could, of course, research and develop a thesis on. By the way, if you want to learn more about the digital asset market and keep up to date on the latest news and developments in this industry, check out my newsletter, newsletter.dynamodefi.com. We have a brief rundown every Monday to give you everything you need for digital assets that week. If you want to see more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.